please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The Nikkei is trading almost flattish as we speak. That's primarily because of some strengthening that we're seeing in the dollar-yen.
Texture of this market is firmly sell on rally. Yeah. I mean, you don't want to sell if there's a gap down 30-40 points.
It's a flat opening, 4 points higher on the Nifty, 30 higher on the Sensex.
IT will be a beneficiary of a weaker rupee, which we think will go to towards that kind of 70 level.
Maruti is now planning to prepone the second phase of Hansalpur plant to October this year.
What we do have is the highest level of debt to GDP ever in the history of the world.
Measures will have to be taken together in terms of trying to stem the the fuel price situation in the retail market. The rupee has played havoc.
The margins, which have come in at around 16.3%, little bit of a disappointment considering that the street was expecting it to probably maintain between 17 to 18%.
Downside with so much correction already behind us, will we continue to fall like the way we have? That also seems, I mean, to me at least, unlikely.
Okay, curious day of trade really, and the most curious part has been the way the stock of SBI, for example, has been reacting over the last 10 minutes. Interesting last hour coming up. Let's see if 10,500 is defended or not. This is Closing Bell. I'm Anuj, with me Sonia. Hi Sonia, good afternoon.
Hi, good afternoon. Haven't we seen this in the past where SBI has first reacted to its stock to the results on the upside, and then as more details emerge, it sort of, starts to lose a bit of its mojo?
You know, for me, what's interesting is that, India's largest bank reporting a big loss. I think 8,000 crores of loss, and, clutching to straws here.
Yes.
I know there's a valuation comfort. I know, there are, you can justify somehow some of these numbers, but
a loss is a loss.
A loss is a loss.
Right?
NI has fallen.
Yeah.
So obviously the PSU banking is in a bit of a mess for now. The call that you're taking now is how much more at 250 on the stock, and this kitchen sinking bit, I think for me, I don't know how many kitchen sinkings you'll have in a lifespan, but anyway, Sonia, what's interesting today is that the bulls have fought today. 10,500 I think is emerging as a bit of a mark where there's some fight. You've gone there twice today intraday, and both times the market has bounced back a bit, but it's not bounced back a lot. It looks a matter of when and not if that mark is gone for decisively. The market is firmly in the grip of the bears. Last hour, in fact, could be quite interesting because once again the mid-cap index is almost already in the red. So that way, things could get interesting. By the way, that's IOC's net profit, 5,218 crore versus CNBC TV18 poll of about 5,758 crores. Numbers beyond a point do not matter, of course, in oil marketing companies. But our eyes should be focused on market, Sonia, because once again, we are seeing a bit of a decline in the mid-cap index.
Yes, we are. And, the problem, I guess, here is that even if there is a bit of a pullback, it's not a convincing pullback, right? It's getting sold into at every level, especially in the mid-caps, and that's something to worry about.
Oh, yes, especially, the lower quality stocks. That's where, of course, there's been consistent decline that we have seen. In fact, that's the mid-cap index, almost now breaking into the red. But let's do one thing. Let's first tell our viewers what we have lined up, Sonia.
Yes, in fact, lots lined up on the show today. So we will be joined by Baba Kalyani, the Chairman and Managing Director of Bharat Forge, to discuss their Q4 results. Auto major Tata Motors reports its numbers tomorrow. We'll get you the key expectations on what you can watch out for. We'll discuss stock ideas with Sandeep Raina of Edelweiss Investment Research. And as always, our technical gurus will take us through the key trading strategies for the last hour of trade.
In fact, let's bring those technical analysts on board, Ashwani and Mitesh, with us for last hour call. Good afternoon, gentlemen. Ashwani, still holding the lows of the day, but not by much. Your thoughts on the market action and your last hour call?
See, while we have come off the highs, but you cannot expect that market touches 10,500 and starts zooming and crosses 10,600 immediately. A person who's fallen from 10 floors, probably will take some time to get up. But once this 10,500 possibly is tested some more and people are convinced it's not going to break, only then some sort of conviction will come in. I don't believe that immediately you are going to break down, go lower, etc. At some point that may happen, but my sense is that you will first see some sort of ranging action before further downsides open up. Having said that, Maruti is a buy with a stop of 8,500, target of 8,650. Havels is a buy with a stop of 540, target of 565. And Jet Airways is a buy with a stop of 416, target of 440.
Okay, well, the stock that's moving up higher now is IOC. The gross refining margins actually are much better than what the street was expecting. So I think there's a 9%, $9 a barrel gross refining margin versus an expectation of $6 a barrel. So there's that immediate spike up that we've seen in that stock. Gentlemen, afternoon. Mitesh, what about you? In the last hour of trade, what would you do? And there is a sudden spike that we're seeing in SBI post numbers. How would you trade that one henceforth?
Yeah. Good afternoon. So I think on the markets, the idea was we'll get some kind of a pullback over the next few days. I think that process is still on. I think Ashwani also mentioned that, maybe, a couple of days we'll do some ranging action. And within that, I think I do expect 10,590, 600 levels to be visited. And with some choppiness, I think eventually we'll possibly break below these levels. But for the timing, I think there could be some stability on a broader range-bound basis, but intraday could be slightly choppy. Having said that, I have two buy calls. Berger Paints is a buy with a stop at 284 for targets of 305. Pidilite is a buy with a stop at 1104 for targets of 1144. And State Bank of India, I think 253 to about 255 is the zone above which if the stock can close, then I think we'll have some kind of a positive turnaround.
By the way, the market's at the low point once again now, and that always is going to be a bit of a problem for this market. Kotak, Axis, IndusInd leading the Bank Nifty lower. Let's hear out from the SBI chairman.
You to consider that the number in terms of the loss incurred by the bank during the quarter and the year may look big, but what we have to look at is that what is the strength of the balance sheet, and that is where I would like to draw your attention. So first thing is that last year we completed merger of 6 banks into SBI. This is the first year of merger. And in a way, the performance is not of SBI alone, but it is the performance of 7 banks. That is what has to be kept in consideration. And if bank has successfully merged 6 entities in 1 year, that is something which speaks about the quality of the management bandwidth and the resilience which State Bank of India has. Second is that the performance has not only been impacted by the loan loss provisioning, but there is a 6,000 crore mark-to-market loss in the last 2 quarters, which is something very unusual. And then the amendment in the Gratuity Act in the last week of the March, so 900 crore bank had to provide for the March quarter for the gratuity. So the biggest question which always comes to everybody's mind is what is happening on the NPA front. So let me confirm to all of you that as far as the recognition of NPAs is concerned, that has been completed and we are fully compliant with the framework issued by Reserve Bank of India on 12th of February. If you look at the provision coverage ratio, it has gone up by nearly 500 basis points. And considering the huge amount of NPAs which were recognized and provided for in the last year, this is remarkable. The NCLT 1 list, which again question comes very often, we have provided 56%, but our estimate is that the loss will not exceed 50 or 52%. NCLT 2 list, the provision coverage ratio is 75%. And as I mentioned that all taken together without the accounts which are under collection, the provision coverage ratio is more than 50%. And if we take into account advances under collection, it is nearly 67%. So the PCR which bank is holding is amongst the best in the industry as of date. And that is what the strength of the bank lies in as far as the future is concerned. And despite huge provision made for loan loss, employee benefits and mark-to-market provision, the capital position continues to be strong and Tier 1 is 10.36%. So this has been helped not only by the infusion of fresh capital, we did a QIP as well as government gave capital to the bank, the management of credit risk weighted assets, that has yielded this strong capital position, and credit risk weighted assets are down by 720 basis points. And this approach will continue, where we will use our capital very efficiently. We do realize that it is a scarce resource, but the entire bank today is geared up with this thinking that we have to be very mindful of the fact that the risk-reward metrics should be in favor of the bank. Other than corporate banking, where we know that what the challenges bank has faced, the bank has performed very well as far as the retail banking is concerned, and it continues its domination. We serve 1/3 of the country. That is the number of accounts which a state bank serves. The transaction banking unit, which covers government business unit, merchant acquisition business, cash management product, it has done fantastically well, and despite so much competition from the fintechs, new players, State Bank has complete domination as far as the digital banking and the payment space is concerned. The number of transactions which are now happening on the alternate channels, it is 80%. Again, only 20% transactions are happening in the branch, and that number is again progressively going down. Another point which I would like to be noted is the portfolio is now very well diversified. Of our domestic book, 57% is now retail and 43% only is corporate. And as I mentioned, that there has been a conscious effort to improve the risk-weighted asset, credit risk-weighted assets. So within that 43% also, the share of AAAs, AAs, investment grade, that has consistently gone up. The benefits of merger and a couple of changes which are under implementation in the organization, and particularly the reorganization of the corporate banking, the reorganization of the project finance, the way we handle project finance, the way we handle the stressed assets. This exercise will be completed by 31st May, and I believe that the organizational structure which we have now put in place in the bank will do a couple of things. Number one, the corporate, we no more view it as a corporate to whom we lend money and use it to increase our balance sheet size. Each corporate, we view it as a large ecosystem, and bank earlier also was consciously making efforts to capture that large ecosystem, but this focus will be much sharper now. All these stressed assets are moving to stressed asset resolution group. That will leave our corporate accounts group and newly named commercial credit group, CCG, sufficient time to look for good quality assets. And as I said, that wherever our expectation of risk-reward metrics is met, we will pursue all those opportunities in a big way, and we are all set to again come to the growth as far as the corporate credit is concerned. But not to forget that retail engine, which is firing on all cylinders, it will continue to do that. There are a couple of high importance projects which have been completed in the last year, nearly completed, not completed, or will be completed this year. One of them is our project Lotus, where a world-class application, consumer-facing application, has been rolled out. I don't think in India there is any application which can match today. Similarly, the CRM is in advanced stage of implementation. Almost 70 to 75% work has been done, which gives again tremendous advantage to the bank in terms of customer one view and the ability of our people at the branches to cross-sell and upsell. And another major project which does not affect the front end is OFSA project, which enables the bank to work out the profitability at a very, very granular level and manage the risk. Any organization, for it to succeed, is needed the HR. And there again, a very complete revamp of the way we train our people, that is again being implemented, and the focus is on developing the leadership pipeline. The focus is on improving and enhancing the skills in the risk management. The focus is on improving the technology and innovation in the bank and continue to maintain its leadership. All our subsidiaries have performed exceedingly well. They hold large value which is waiting to be unlocked. And we have plans to unlock that potential and value in the current year as well as the next year going forward. Just to summarize that when we look today, we speak from the strength of State Bank of India. We have put past behind us. Last 3 years have been very challenging, but in any organization's history, these type of situations do come, but what matters is the capability of the organization to meet those challenges and emerge stronger. So today what you are seeing is a much stronger State Bank what it was 2 years ago, and the resolution process, IBC, which now we are starting to see the benefits, that gives me great hope that the RBI framework of stressed asset resolution, which is a 12th February circular, the IBC with all the initial hiccups, if we forget that, and the risk governance architecture which has been strengthened in the bank. So we are poised for growth now in a risk mitigated manner. So these are my opening remarks. Then we will do a quick presentation and then I will take the questions.
Okay, what we'll do now is there's going to be a presentation. After that, some Q&A, and in Q&A, I'm guessing there will be some important questions. So then we'll cut back. Deepak Shinoy of capitalmind.in is also with us. Deepak, good afternoon. Let's start with SBI and those numbers and the market reaction.
I haven't seen the market reaction yet, Anuj, but I think the numbers, I don't even know what to say. There's a 7,700 crore loss. I think a lot of the banks are betting on their retail franchises to keep up or make up for the corporate losses, but typically cycles do tend to impact them adversely in a couple of years. So I don't believe at this point that this result is anywhere close to satisfactory. I haven't read all the presentations yet, but at least to my mind, this is and a lot more is going to come because they are going to have to spread some more of the losses across the next 2 or 3 quarters. So I don't think this is a great time for PSU banks in general. You have to be very selective, and most of them are even SBI. I don't think it's in a great investable position.
Okay, so not a great time to be invested into PSU banks considering the huge losses that they're sitting on. Today is a day of recovery actually. Look at something like a Stride Shasan. After falling so much, that stock is now up almost about 13% and big volumes coming in over there. Deepak, hi, good afternoon. Wanted your thoughts on Bharat Forge. The management commentary has been quite positive. Would you put in fresh money to work here?
I'm not actually tracking Bharat Forge anymore, but it's interesting because I think much about Bharat Forge is related to US truck sales and the numbers that come in there, and we've not seen any major negativity on that front. In fact, most of it, the commentary and the data seems to be positive. So overall, I haven't seen anything specific to Bharat Forge, but I think as that segment goes, it's a long-term good investment. It's a long-term good investment. From a pricing and valuation perspective, I don't have any data right now to give.
Okay, Deepak, stay on with us. We'll take a break. As we do the break, a couple of these metal names are surging all of a sudden. Just pull out the intraday chart of a Hindalco. That stock right now making highs of the day. Coal India as well. So some of these commodity metal names doing well. So just keep an eye on some of these. We'll take a break.
So we're counting down to what has been quite a volatile day of trade. I mean, it's flat for the headline indices, but look at all those jagged edges that you can see on your screen. Sandeep Wagle is with us to tell us how to approach the last 45 minutes. Sandeep, hi, afternoon. By the way, those are Symphony's numbers. Before anything, the revenues have fallen quite a bit and the stock has too. What are you looking to trade now, Sandeep?
Afternoon, Sonia. I would go with a buy in a Pidilite Industries, stop loss of 1100, target 1152, and a sell in a Ultratech Cement, stop loss 3810, target 3690.
Okay, well, selling on an Ultratech Cement. In fact, Ultratech Cement has been under quite a bit of pressure. But from one Sandeep to another, Sandeep Raina, the Associate Director of Edelweiss Investment Research, joins us now on the show to talk about a couple of his stock ideas as well as what's been happening in the market. Sandeep, good afternoon. The common view is that, PSU banks is a strict no-no for now, considering the amount of pressure that they are facing in terms of asset quality. What would you do with a name like SBI after looking at the numbers that just came out?
Yes, I saw the numbers, but I think in PSU banks, I don't think so. For that matter, any bank, the simple number one number that we have to track is only GNPA and NNPA. If, let's say, NNPA and GNPA they are on track, then I think the stock can be bought. And that is what is happening in the market. So for SBI, see, most of the banks are growing on the revenue side. The problem is only the GNPA. So let's say if we look at the results of Axis or for Federal, or for that matter, any other bank. So there was a change of 100 bips on the GNPA side. So the market actually punished those stocks. However, on the SBI side today, if you see the bip change is only 30 bips, which is more or less on track. And also the recent Bhushan Steel is positive for them because they will get some kitty from that. Now, so based on that, the numbers look good. So that is how you have to track the banks these days. There's nothing else you have to do for them.
Okay, let's Sandeep, hi, good afternoon. Your thoughts on pharma names and how to approach that?
I think pharma more or less would be an avoid, frankly. Although recently, if you see the numbers of Lupin or let's say, I think the DR also looking at more or less in line. So the downward trajectory, what was happening in the market for pharma stock, that has arrested, no doubt. And also on the valuation front, more or less they are not very expensive. But having said that, will I be a buyer in pharma with a lot of vigor? The other answer for that is no. I'll be just still watching the pharma stocks and then specifically I'll be investing in them.
Okay, so I know this is a very tough market now. Mid-caps have corrected significantly and portfolios are bleeding. But for somebody who's perhaps looking with a 3 to 4 year time horizon, are there any interesting value buys in the mid-cap space? Anything that you'd want to talk about?
So trust me, if you look at the broader market, maybe market is looking not good. Specifically, the mid-cap index is looking very bad. If you see the charts, just to check how the lines are moving, it's looking very, very bad. But having said that, there are a lot of things that are looking good. Let's say in chemical space, things are looking interesting. In few infra space, things are looking interesting. Few NBFCs also looking interesting. So specifically, let's say I talk about a company called Deepak Nitrite. Now, Deepak Nitrite is looking interesting. And if you see the off-late results, the results are also good. But the biggest point in Deepak Nitrite is the new plant of acetylphenol that is coming on stream. And I think it will come by July of this year, so further 2 months. And the huge demand for acetylphenol. It's a fully 100% important product. To be precise, 95 to 96%. So that all will happen. So the entire ramp up will happen faster because the demand is very strong. Also, the spreads are moving up in this. So this company, in fact, the entire project of 1,000 crores will give them revenue of 1,300 to 1,400 crores in just 1 year. And look at the profitability that will move up. So in this year, they have done close to 80 odd crores. And next 2 years, they will do some 250 odd crores. So given the kind of increase in PAT, this stock should be bought. And in fact, we have to buy all the companies where the results were decent and the valuations are under control. For this company, valuations are more or less under control. That's how it is.
Okay, Sandeep, it's been, of course, as Sonia said, a tough market for mid-caps. I wanted your reaction, for example, in what's happening with some of these high-profile names like Voltas, Symphony, after numbers, and the market's been quite brutal with some of these.
See, I'll tell you, market is playing a very, very, the thing is what they're doing is if you're not giving us numbers, we'll just sell you off. That is a very Symphony, a very, very high PE stock, has always delivered, but this time it couldn't deliver. Similarly, the same thing happened with Voltas also. Darling of the market, the number were not as expected, the valuations were high, you sell the stocks. So market is very, very clearly demarketing. If you are showing me the numbers, I'll respect you. Still also I'll sell, or maybe there is a weakness, but if you are not showing me the numbers, then then you are just there. I have to sell it at any cost.
But then even with the case of, some of these companies that are delivering numbers, the stocks are under pressure, right? Sandeep, I mean, look at something like an Ashok Leyland. The numbers were pretty good this time around. There were no problems. Okay, maybe slightly below what the analysts were expecting. But otherwise, it's been a good performance all year round. Why do you think there was a big sell-off there?
So, in fact, Ashok Leyland, if you see, the stock was down before the result by 15-18% and I think post-result it has recovered today. I think it was up 7%. That's what we're looking at. Now, Ashok Leyland, I think market will come back and kind of respect him again because the numbers they have delivered. But having said that, the stock is not cheap at all, given the fact the single line product, although growing, but it's an expensive stock. So I'm saying look at other auto stocks also, let's say Maruti, which again is expensive stock, but market is not giving the kind of respect to Maruti because again from the top it is down 15-18%. So I'm saying market overall is very weak because since we not talk about that, because there are 4-5 factors which we need to look at, and the biggest is the bond yield. So I don't think so there's a possibility of a bull market if yields are above 8%, and we are currently at 7.8. Then there is a crude, there is a fiscal deficit problem, there is an inflation that will kicking in because of crude. So there are a lot of things that is happening, and people generally want to be light, and that's why any small trigger in any this thing that they want to sell it off. It's as simple as that, right? Now people just want to be light on equity. They want to be in cash, on more or less on the mid cap. All the bad mid caps, they just don't want to be touching. They just want to be away from that. Only the earning respect is there. That's about it.
Okay, by the way, it's a lot of these FMCG names are now hitting highs of the day. Nestle, for example, that one is at the high point. Just pull out a couple of others. Dabur is at high point. A couple of other consumption names also doing well. Page Industries is also at the high point. Pidilite is at high point. So a couple of these names have done well. Thoughts on this space? Then we've seen quite a bit of rally, of course, but most of the stocks at the high point. So how to approach some of these names here?
I think FMCG is one of the best performing, and if you see the results also, most of them have delivered good numbers. So HUL, they have given very good numbers, and also the commentary given by the management is very, very strong. Similarly, Dabur has given good set of numbers, and the commentary is very, very strong. So on the FMCG side, I think it's a very, very different this thing, because everybody is talking about a very good demand going forward. And I think the function is rural India, because I think rural India would be the focus for next 1.5 years, because I think a lot of spendings are happening. And if you see most of the companies specifically having their presence in rural India, be it any of the sectors, you will see CV financing or tractor financing, that side also they are doing very well because the rural sector as such is doing very well. So FMCG, again, 50%, most of the companies deliver 50% revenues from that, specifically HUL. So that's why these companies are doing well, and I think for 1.5 years they will do probably better.
Okay, Sandeep, we'll leave it there. Thanks a lot for joining us today. That's the view from Edelweiss. By the way, the SPI stock is once again moving up. Let's just cut back and see if the management is addressing some of the important questions.
We are in active mode to unlock their value in the coming this year and next year. Thank you. One by one.
Just a second. We'll have one by one question and request everybody to have one question at a time, so that everybody gets a chance.
Mr.
Ritu.
Kumar, hi, Ritu from CNBC. So first question on your watch list, it's increased to almost 25,000 crores. This at a time that you're saying you've recognized most of, all of the stress. So what has led to the increase in your watch list, if you could specify that?
No, it is not only watch list. Earlier the watch list did not include, I think, SMA 1 or 2. This time it is not only the watch list, but SMA 1, 2 on the corporate side. So it is not an increase, I would say. But this is the whole universe of what we believe, that if at all the account has to become NP or slip, this is the limit, 25,000 crore. But as I said, it's not going to slip.
If you could please go back to that slippage slide,
Yes,
sir.
yes.
We wanted to see
Just a minute. That watch list?
You see the watch list.
We can open the... Yeah.
As far as the watch list is concerned,
Next slide. Next slide.
we have covered whatever is there in the revised SMA 1 and 2 of the RBI, where we feel that, while it is regular today and need not be classified as NPA, but we needed to show that these are some of the things that are still in the SMA 1 and 2 categories. So as the chairman said, it is not that necessary that these will fall. Largely, we would like to complete
give a huge comfort to everyone.
So just to follow up then, what is the total quantum of slippages on the back of the Feb 12 circular?
5,500 crore, 5,662 crore.
All right, sir. And
we'll have one question, please, so that everybody gets.
These are basically the ones that have been slipped from S4A and SDR. So because that system has gone out, so whatever was there has been classified as.
So for the restructured book, if I'm not mistaken, based on third quarter numbers, stood at about 35,000. So if you could explain to us then what was the movement of these restructured accounts?
See, in the third quarter, we had given a total book of 50,000 crores, which was in different forms of restructuring, whether 525, SDR, S4A, standard restructured. It was not a watch list. It was a pool of restructured which we had shared with the market, excluding the overlaps. Now, out of that, about 18,000 crores has slipped this year, this quarter, and around 25,000 crores is now part of the watch list. Even those SMA 1, 2s actually formed, they were restructured once upon a time or something. So we have only removed about 3,000 or 4,000 crores from that 50,000 crores where we are very confident it's not going to slip in the future. So 50,000 covers 18,000 crores what has slipped, and another 25, 26 is part of the watch list.
Sir, on the NCLT accounts, in the notes to accounts, you mentioned that you've written back some provisions. What is the quantum? And
2,520 crore.
And what is the expectation on recovery, because Bhushan is now done, so...
Right. So as I said, that the provision we are holding 56% on NCLT 1, and our estimated loss on this portfolio of 12 accounts is within the range of 50 to 52%. So some accounts will recover more, some accounts we have to provide.
And on credit growth, what is the FY19 target?
Pardon?
Credit growth?
We'll have one. Okay.
No, just still, I think...
credit and deposit growth, what is the FY19 target?
For the deposit growth?
Both credit and deposit.
So the credit we have said 10%. 10%,
yeah.
10. And deposit, like we are not chasing the high cost term deposits. So we are building our CASA base further, which is again, it has improved by more than 100 basis points last year. And the targeted growth in deposits is 9%. So we will like to see a better CD ratio than what it is.
We have revised the budgeted targets to go towards the return on risk-weighted assets. And that is how the budgets have been done this year. So working backwards, we thought that the credit growth of around 10% would cover that. So it could be less or more, but more importantly, we are this year focusing also on the return on risk-weighted assets.
Yeah.
So
Just
we'll get the mic.
1 second and then I will move to you, Manju.
You always say that your merger of subsidiaries also created a bit of NPAs. So out of the 7,700 crore, how much would have, as a result of the merger?
We have not done. That analysis we have not done. What the only limited point I was making, because now we don't do any more erstwhile ABE or Bharatiya Mahila Bank. So we are not doing bookkeeping in that manner. The only limited point I was making that it is not performance of SBI alone. It is a performance of 7 banks. So otherwise each bank would have declared their results separately. Now what would have been the combined effect? Very difficult to say.
And what is the amount of loans you have in the OCA account?
OCA is about
104,000 crores.